Hi there. Today we're going to talk about the difference between USDA and VA, both 100% loan programs. Um, One to be able to help people that are purchasing homes out in outlying areas, I would say farm areas, but that's really not the case. It would be in areas where you have less population, smaller towns, and the USDA loan was created to be able to get people to move out into those areas. It's 100% financing. And actually, it's a little bit over that, and I'll explain in a minute. And then the second one is VA. So our federal VA loan programs, again, is a 100% loan program. It does have a funding fee. We'll talk about that in a minute, but both of the funding fees for USDA and VA are financed on top of the loan amount. So let me run through with you. And then, of course, federal VA, you can only do a federal VA loan if you've been a veteran in the past. So let me run through these. We're looking at a $450 purchase price. You'll see that the loan amount for USDA is $454,500, and then you'll see that for federal VA it's $459,675. So more than what the purchase price was. Hence, it's a little over 100% financing program. Interest rates are going to be about the same. They both follow really the same guidelines on interest rates there. And then here we're looking at the payment. The payment you'll notice is going to be higher on your USDA program opposed to on federal VA. And let me run through why. Closing costs are going to be about the same. I'll explain. Federal VA is going to be a little bit lower. I'll explain in a minute. But it looks like really the savings difference between the two programs, you're looking at around $97 savings. So if you're looking between a USDA and a federal VA, it might make sense to go federal VA because it is 100%. And the key is with federal VA, it has no monthly mortgage insurance premium. So, where USDA has that mortgage insurance on a monthly basis, it can be roughly $131 a month. You'll see that the principal and interest payment is going to be a little bit lower on on USDA than it would be on federal VA, just again because the loan amount is going to be a little bit lower. But again, what's driving up the payment is the mortgage insurance premium. Now, as we look at closing costs, you'll see that USDA is 101% financing and federal VA is 102.150. Now, on federal VA, you have different levels of a funding fee that federal VA is going to charge. First time use is 2.15% of your loan amount. Multiple use, you're looking at around 3.3%. That is as long as you're going 100%. If you're going 5% down on federal VA or more, then that funding fee will be lowered. Now, if you are a disabled veteran and disabled per VA, so we need a letter that states that you're a disabled veteran, a lot of times the disabledness will knock out that funding fee. So you can actually get a federal VA loan with no funding fee. So that's one thing to take a look at. Now, we charge $15.95 to do a loan, and then we've got non-APR closing costs. This will be appraisal, tax service. Appraisal, tax service. It would be underwriting, processing, those different fees. And so these fees are going to be a little bit lower because with federal VA, I didn't take out the ones that federal VA cannot pay, that the seller has to pay. But ultimately, we can address that with your individual loan. This is just really an illustration purpose at this point. Again, the mortgage insurance premium on USDA, $4,500 would be financed on top of the loan amount. It's 1% of the purchase price. And then on federal VA, it's 2.15% of the purchase price. And that would again get financed on top of your loan amount. So the prepaid closing costs would be your taxes, interest, and insurance. So if you have any questions at all, please reach out. Please let us know. We'd love to work with you either way on USDA or federal VA and explain the differences. All right, thanks. Have an awesome day. Bye-bye.